For those of you that have followed me for any length of time, you know that I am a big fan of Brookfield Asset Management, Brookfield Corporation, and the subsidiary entities that it owns. This is a group of businesses that have done incredibly well for their shareholders, and I, for one, tend to believe they're going to continue to be great investments to hold. I'm Jason Hall. This is The Smattering. I've got somebody here with me, Tyler Crow, who thinks it might be time to sell. Hey, Tyler, you got a tough job here to convince me that that might be the case.
Brookfield's one of your favorite companies to talk about, own basically anything. So yeah, I get it. I got a pretty high hurdle here, but I think I might have a reason.
I think one of the important lessons here for anybody that's watching this is don't skip the bear thesis, the potential risks for companies that you're very bullish on, because that's exactly how you walk into financial mistakes. Also, before we get going with this, I want to remind our viewers we get to make these videos because of our partnership with the Motley Fool. The Motley Fool's helped me be a better investor, can help you be a better investor too. If you're looking for some great stock picks, go to our link, fool.com/thesmattering to get more on that. Okay, Tyler, again, I've laid the case for Brookfield as this great long-term investment. Bruce Flatt, the CEO, kind of the builder of the modern business as we know it today. Tell me what your concerns are.
Let me preface and say that I do own a lot of Brookfield, and I own several of the subsidiaries, infrastructure partners, renewable partners. What is starting to concern me a little bit more, the more and more I own, the longer I have owned it, and the more I've listened to management, the thing that concerns me is I feel like it continues to add layers of complexity to its operating model and to its corporate structure, to the point where I am less and less certain of what I actually own at any given moment within the various corporate entities. With the subsidiary partnerships, Brookfield Infrastructure, Brookfield Renewable, I have a pretty good sense of what it is. You can see the assets on the books. You can listen to management.
And on the operating side, this is kind of like the bottom layer if you were to like build a pyramid of like the corporate structure with Brookfield Corporation at the top, right? So this is the parent company that owns an equity stake in those, Brookfield Renewable, Brookfield Infrastructure, Brookfield Business Partners, which is like its industrials spin out. It owns the Brookfield Property, which is its like commercial real estate business. It owns 80% of Brookfield Asset Management, which it recently spun out. 20% of it was distributed down to the shareholders of Brookfield Re, which is a new business that it's just started. It owns the majority of Oak Tree Capital. This is not complicated. Come on. How is that complicated? There's only 360. Oh, of course. And then Brookfield Asset Management, there's different LLCs for every single investing bucket that they have within them.
Exactly.
Yeah, this is
getting to my point. Is that
yes.
The layers of complexity are getting harder, and trying to peel back the layers to really understand the core of this business is getting harder and harder. Now, if you read like investor day presentations for Brookfield, it's becoming very, very, you're seeing things like we're going to be able to grow the underlying business at 19% annually over the next 7 to 10 years, and numbers like that, 15, 17, 19, numbers like that, which really are impressive, right? Like we hear, oh yeah, I want to get in on something like that. But like with this, the value, the investment thesis is becoming more and more and more listening to management saying, just trust us. We know what we're doing. And it's worked so far. They've done a fantastic job of growing their business. But there's just that lingering thing in the back of my head saying, well, what if they're not right this time? And what if something goes awry, or there's a management change, or different people come in with different investing philosophies or things like that. Where when you become more and more reliant on the people at the top, the business becomes a little bit more fragile. And so things like that have me a little bit concerned with what I own at the parent level. And part of the reason why I'm having a harder time understanding it and less enthusiastic about owning the company over the long term.
It's not just that this is a business that's complex. It's a business that seems to be becoming increasingly complex while also having a high level of opacity to actually see what is packaged inside the combined business that you own, the further you move up the corporate ladder. And then you take that and you combine it with potentially unrealistic expectations about future growth rates that management is touting. And then the icing on this bearish cake is just trust us. We're going to deliver. And what you're saying is that you see maybe more risk of being able to execute. I hate to bring up Enron because I don't think you're necessarily making the case that this is a giant fraud, but there's a lot more risk that you see, and you're trying to manage that risk inside your own portfolio.
It's kind of the alternative. Like, there's a world of investments we can make, right? If I were to take that capital of mine and deploy it in some other company that, maybe it's not projected to do 17 to 19% that Brookfield's doing, but I can find a thing that makes a good return, and Brookfield still does great, that's fine. But if I stick with Brookfield and things go wrong because of these things that I'm starting to see, then I'm going to feel like an idiot.